Thanks for tuning in to India Market Close on a day when the broader markets are doing well. IT is sulking and putting that little bit of pressure on the index, as a result of which the Nifty 50 is down 0.6%. Look at Nifty IT today. Slam dunk, 2.5% lower today. Principal reason why the indices are doing what they are doing. The broader markets, as I said, not doing too badly. If you look at the mid cap and the small cap indices, relatively flat for the mid caps, so in the green, which is great. Small caps up 0.79%, and which is why if you look at the market breadth, the advanced decline ratio maybe 2:1 or thereabouts, because it swifted from the start of the trading day somewhere around this level is when it moved into the green, and 3:1 in favor of the declines even now. So not bad going as far as the broader market breadth goes, but IT putting pressure. Bring up the heat map of the Nifty. And I'll talk about the large cap names before Mahima comes in and talks about what's happening at the broader end of the spectrum. But look at this. Infosys 3.5 ahead of the numbers. There is weakness in LTI, -3% lower because of the resignations, presumably. But the entire IT pack has looked wobbly. Wipro is down as well. HCL Tech is down. TCS is down. And Tech Mahindra. 6 of the top 10 losers are IT names. What is doing well? That's the key question. Divi's recovers a little bit of lost ground, 1.24% higher in trade. There's strength in iShares, of course. And HUL, which had very high volumes in yesterday's session, is up about 1% as well. So some bit of defensive bent at the index level, but IT clearly putting pressure. Just before I hand it over to Mahima, if I can just pull up the contributors list, you'll of course see IT names out there. Infosys and TCS would presumably be in the list of those right here, 40 and 24, 16 points respectively. But ICICI Bank continues to stay sluggish, as does Larsen and Toubro, 2 days on a trot. But Mahima, if large caps are sulking, mid caps are anything but sulking.
Absolutely, Niraj. That's true. But I'll shift focus to more stock-specific action. I'll talk about CRISIL, which has come out with its earnings today. Well, the earnings don't look good. The stock has been under pressure. Now, in terms of revenue, the revenues have increased by around 3% year on year. In terms of EBITDA, the EBITDA is down around 5.6%. The margins have declined 28.5% versus 26%. In terms of net profit, the net profits have declined by around 5%. The board has declared a dividend of around 7 per share. Next in focus is Ugro Capital. They came out with the business update. Well, their overall AUM on March 31st was around 9,000 crores, which is up around 48% year on year. In terms of borrowings from banks, NBFCs constitute around 46% and 8% of liability mix respectively. Now, in terms of their off-book AUM at 46% as of March 24 versus 40% in March 23. Then we also have Dynacon Systems Solutions, where the company has won an order, in fact a contract worth rupees 233 crore for core banking solution. This is now from NABARD, and this is a 5-year contract. So this particular stock is also buzzing in trade. Now we also have steel strips wheels, where the company has received an order for supplying aluminium wheels, and this will be for a passenger car manufacturer. Now one more travel stock which is in focus today is Thomas Cook. Well, they have expanded its foreign exchange distribution in Delhi NCR. Now the total store in Delhi NCR stands at around 12, and various products and services will be provided by these stores, like cash and currency exchanges, overseas remittances, different prepaid borderless cards, etc. And lastly, one interesting stock that is in focus is Happy Forgings. They did come out with the business update. They won an order from leading global Taiwan manufacturer of automobile component. This will be for manufacturing and supply of brakes. And for this will be, of course, for passenger vehicles. But with more on all of these stocks, back to you, Niraj.
Yep, a list of stocks which are doing well. Let's try and get in our guests to try and understand what to do in a scenario like this. Well, Soni Patnaik of JM Financial Services and Dharmesh Kant of Chola Securities with us on the show. Both of you, thanks so much for taking the time out and being with us. Soni, I'll start off with you. The index may be deceptive because the market breadth has looked solid. Are we seeing some support at lower levels? And is there an index trade that you would take, either the Nifty or the Bank Nifty or any of the other indices?
Hi, good afternoon, Niraj. Thank you so much for having me on the show. I think, yes, Nifty has tested 22,100, which could act as a cushion. Technically speaking, then it should be the support around somewhere around here, around 22,100. However, not a lot of upside can be seen either from current levels, because the options metrics data, it is indicating that there's a lot of call writing that can be seen in 22,300, 22,400 strike prices. So I think the upside can get restricted, or in another scenario, it can be a sell on a rise market until and unless the global issues or global tensions are not settled down. So I think that's how the index is reflecting those data points as of now. On any downside, if 22,100 breaks on closing basis, we may actually see 21,900, 21,800 levels getting retested once more. So I think Nifty, it has also been adding a lot of short built-up positions yesterday, today as well. Approx 7 to 8% of short built-up positions has been added in Nifty. So I think it's just a bit of a cautious trade, and avoid any fresh longs until and unless 22,400 is not taken out decisively in Nifty. Any fresh longs should be avoided from current levels. And talking about Bank Nifty, I think Bank Nifty on expected lines, 48,000 was support. It broke the support yesterday. It has tested 47,300 today. So Bank Nifty is very much at the cusp of its support right now. 47,000 is a good support. It should hold. You can see some short covering, some relief coming in for Bank Nifty from current levels to 48,000, 48,200 at max. I think fresh longs should only be initiated in Bank Nifty only above 48,200, or else just avoid as of now, remain hedged, stay cautious, and it could be a sell and rise market until the data doesn't reverses from current levels.
Specific stocks, Sony, for the day?
So the first would be Deepak Nitrite. We've seen aggressive long built-up positions taking place in Deepak Nitrite today. There's also a good range breakout on technical charts. So from current levels, one can buy Deepak Nitrite, keeping a stop loss of 22.70 and a target of 24.50. The second trade is also on the long side. LIC Housing Finance, we're seeing aggressive long built-up positions. It's fresh longs adding in LIC Housing Finance. And, it's been supporting, it's been defending a very strong support of 620. Even in the market volatility, we saw that LIC Housing did not go below 620. So that's a very strong support. So keeping a stop loss of 620 can be bought at current levels for a target of 720.
Right. So we also have Mr. Dharmesh Kant from Chola Securities who joins us now. Well, Dharmesh, I want to understand something like HUL. Where do you see the value in HUL? Because we've seen that, the stock has been under pressure since long, but it's been buzzing in volumes yesterday and today also is up. It's up around 1%. What do you think about a stock like HUL then?
Yeah, by the way, I think it's more of a trade-off between how the market are placed and how defensive stocks are placed. So HUL had seen a good price action on the downside earlier, and Q3 earnings were no surprise. It was not a very good set of numbers, and this time around also the expectation is same. And with the heat wave doing the rounds of the country, I think rural India will continue to bleed on the volume growth as far as that is concerned. We need to see the Q4 earnings update. My own sense is it will be a low single-digit volume growth, and hardly any price monetization uptake out there. So it's in a spot. This is just a trading blip which we are seeing. I don't see any, going forward or a drift kind of an action happening in HUL. So, and local competition is heating up. So we had our dealer checks done across the multiple states, and the case in point was that HUL has been losing business. So we are not advising our clients to buy it from an investment perspective. Trading perspective, 2-3 percentage point is always on.
Okay, our sector of the day though has to be IT, and before we get in our guest's view on that, let's get in our in-house experts. Rucha Somaya joins in with some perspective on what is dragging IT. And Rucha, suffice to say, it's not just one factor.
Yes, hi. So Nifty IT is the sector of the day. It is down 2.5% with all of its constituents in red, while Infosys and LTIMindtree is the top loser. So we'll move on to talking about why Infosys is the top loser. Number one, it is set to report its result on Thursday. The street expects the revenue growth to decline, although marginally, while EBIT margin to also improve marginally. There were no large deal wins announced in the fourth quarter for Infosys. The key to look out for is the guidance. The street expects FY25 constant currency guidance at 3 to 6% and the EBIT guidance at 20 to 22%. We'll move on to what LTIMindtree has the noise about. Yesterday, two global heads resigned, global sales heads resigned, bringing the total resignations since the merger to 8. While I'll highlight the major resignations, number one, CEO of LTI Sanjay Jalona just resigned a month after the announcement of the merger. Venugopal Lambu, the whole-time director, also resigned just about a month back. And CFO Vinit Terdesai has also stepped down of the merged entity. So this was with respect to Infosys and LTIMindtree specifically. Now moving on to qualitative aspect of the sector as a whole. So there are no hopes of recovery of demand, and there was no concrete green shoots from the TCS management call that had happened last Friday. Accenture also cut down its FY24 guidance to 1 to 3%, which was previously at 2 to 5%. And the macroeconomic uncertainties also are, the cause for further tightening of client budgets. So I think largely, again, discretionary spends are under pressure and clients are still waiting for, near-term visibility, which is causing the IT sector as a whole to underperform.
Well understood, Rucha. That is very well explained. But I think, Sonia, I'll come to you first. I just want to understand how the Nifty IT looks on the chart, one thing, and how does Infosys look on the charts?
The entire sector has been on short rollovers. They are quite weak from the very beginning, very start of April series. Even if we talk about current levels, we do not see any relief coming out for IT sector. It has been a contra bet right from the very start. I think if we talk about particularly Infosys on charts, it has given a very strong breakdown today on charts. It has broken its major support of 1460 and 1400, 1380 is the next level of support that can be seen on charts. Not a lot of strength can be seen for any sort of reversal coming on Infosys. Resistance right now that was earlier support of 1460 becomes a resistance right now. So until and unless Infosys is not able to cross back above 1450, 1460, there may not be a high chances of any upside movement coming in. So I think on the lower side, downside, you can see 1380 also getting tested for Infosys.
Okay. Well, just quick question, Dharmesh. Good afternoon to you. Weak results of Infi priced in already, or do you reckon that with the commentary that has come in from Accenture, from TCS, and if Infosys also kind of becomes sluggish, then could there be a valuation drawdown further?
Yeah, Dr. Niraj, I think there could be a valuation drawdown further. Because if you look at the context, the entire bet was like there will be interest rate cuts in the US, and this will lead to a traction in BFSI spending happening. So the discretionary part from the BFSI segment will pick up for Indian IT companies. And Indian IT companies, the business they foray into or the product offerings they have is more in line with what the Accenture has. So there has been no change. In fact, now the fear is that there won't be any interest rate cut in the US maybe this year itself. And this time extension of when the things are going to improve and BFSI segment, orders info keeps on rising or it keeps flowing in, is again into our down sector. So I think it will be a sluggish kind of a valuation drawdown kind of impact. Let's see what Infosys gives us to the guidance. They have been very, very erratic for the last 6-7 quarters. Every time they have been juggling with the guidance number, and 3 to 6% to my mind is a very tall task. So hardly, I don't see it coming through. So any guidance below that, maybe in the range of 1 to 3% or 1 to 4%, as they do usually, and then they trim it down. It would be difficult for this company to hold the current price action. So I mean, 2 more quarters to go before you can see some stability coming into the upside price action for IT companies.
Understood, Dharmesh. But we'll speak about this further, and we'll talk about a lot of other more stocks that we'll be addressing in the show. But time for a quick break. Stick around as we talk to the management of Veranda Learnings. Stay tuned. Welcome back. You're watching India Market Close. Well, one stock that is in focus is Veranda Learnings. Veranda Learning and Pearson have formed a strategic partnership to advance their higher education in India. Now, to talk more about this and what the future for the company looks like, we have with us Mr. Suresh Kalpathy, ED and Chairman, Veranda Learnings, who joins us now. Welcome to the show, sir.
Thank you. Thank you for the opportunity.
Yeah. So my first question to you would be that, with this strategic partnership that you've entered into with Pearson, what kind of synergies are you looking at and how much will this add to your top line?
I think first is this is part of a significant effort to expand the scope of services that we offer into the education space. Given the breadth of businesses that we are currently involved in education, the Pearson's strategic agreement that we signed today allows us to expand the content that we have both in print and in online and digital format across the entire Pearson ecosystem. This will involve the relationship that we have in the test prep space. This is relating to state and central government exams, in which we have already started launching some of our material through the Pearson's network. This will also significantly involve a whole array of products that we will launch in the software space. Going forward, we expect to be able to do this across each of our business units. Internally, we call this a business to publication strategy. And this is one of the first agreements that we have signed in this space, but you will see more of it. This allows, of course, the brand to expand very significantly, leveraging on the deep penetration that Pearson's has in this space.
Understood. But just to give me a ballpark figure, if you can, what kind of top line addition will this do to your particular revenues, and any ballpark figure that you can give us in terms of quantification?
I think the first impact that we expect to see is in terms of expanding the reach of the student base that we have. Currently, as we complete the year, we expect to cross 1 million students whose lives we would have touched during the last 12 months at Veranda Learning. We expect this number to get significantly amplified based on this relationship. So we would expect to see possibly a 10 to 15% move up.
And then, so how much will your margins improve by? From what I understand, your EBITDA margins are around 16 to 18% at present. So then do you expect the margins to go up from this? If yes, how much?
We would expect this to add to our EBITDA margins, essentially because one of the cost centers that all education businesses have is what we invest in R&D to develop all the content. Predominantly, this has always been a cost center in most of the education businesses. This relationship allows us to expand an area of content that we can sell into, and that we expect to ensure that the cost center that we have in terms of R&D starts becoming a profit center. That's really what we would achieve. So that typically is a cost of about 3-4% in our books. And that's what we expect to be able to add to our bottom lines.
Understood. And also, while I was going through your transcript, I just came to know that you've given a guidance that your revenues will grow at 100% in FY25. So what does the trajectory look like? What is the kind of revenue target that you're aiming at by FY25?
The current target that we have put out there in public domain, we expect to be at about 400 crores of top line and an EBITDA of about 140 crores for FY25. This is again based on the acquisitions that we have already completed. This is based on the businesses that is already owned and operated by Veranda Learning at this time. There are some acquisitions that are being targeted, which would expect it to be the last big ones that we do before we complete stitching the fabric of Veranda Learning together. And this does not include any of the new acquisitions. This is just the existing business organically growing. We expect it to go to about 400 crores of top line with 140 crores of EBITDA.
Understood. And my last question to you would be that, you want to achieve the margins of around 27 to 30%. How early do you think you can achieve this?
If you look at what we are projecting for FY25, you will see that the margins that we are projecting is upwards of 30% in terms of EBITDA. And so you should see that in the next 12 months.
Okay, okay, Mr. Kalpathy, thank you so much for taking out time and speaking with us at NDTV Profit.
Thank you so much for the opportunity.
Right. Soni, I think I'll come back to you. How does Veranda Learning on charts look like to you?
So on charts, I can see that it has given away its morning highs of 202 or 203 that can act as a short-term resistance. And until and unless those resistance levels not crossed, there could be some difficulty in the stock just moving up or showing any sort of upside. So any fresh longs can be added once it has crossed 203 as a resistance. Above that, you can see it testing 215, 218 levels on short term. Immediate support is 185, 188. As long as this support is also getting defended, it may remain sideways for now, but fresh longs should only be initiated above 203.
Okay, let's move on to stocks which are showing a larger move. Bharti Hexacom certainly fits the bill. Jefferies came out with a note initiating a buy rating on the stock. Smriti has looked at that note closely, Johnson, right now, with the key highlights of that. Smriti, what makes Jefferies bullish on Bharti Hexacom?
Well, yes, Bharti Hexacom shares are gaining today on the back of a Jefferies note. Now, Jefferies has initiated a buy on the stock with a target price of 1,081 rupees, which is a 33% upside. Now, they say this is the best play on India Telecom. And the rationale that they've given is that it offers a way to invest in faster growing parts of Bharti Airtel. Now, remember, Bharti Airtel is the parent company of Bharti Hexacom. They've given some numbers as well. They say they expect the company to deliver a 16% CAGR revenue while 20% CAGR EBITDA from FY24 to 27. They also expect moderation in capex to result in 40% CAGR in free cash flows. Now remember that Bharti Hexacom does not have any spectrum liability for these payments. Now the spectrum moratorium, the payment for these moratorium is going to be lifted in FY26. So there's not a lot of liability on Bharti Hexacom for that, and that will help boost its free cash flow margins by 4 to 6 percentage points in FY26 and 27. There's a hefty market share gains that they expect for Bharti Hexacom because they operate in lower tele-density areas. Now remember, they operate in Rajasthan and Northeast area, and that's pretty much where their operations are, unlike Bharti Airtel. They expect a 20% CAGR in ARPU, 4% CAGR in mobile subscriber growth over FY24 to 27. However, they mentioned two key risks. One is a delay in tariff hikes and a change in terms of related party transactions with Bharti Airtel.
Well, 10% higher, Smriti, thanks for that. And, Telecom is firmly in focus. So there's this Bharti Hexacom stock movement. Then sources flashes from Bloomberg, which says that GQG may plan to invest around 400 million in Vodafone Idea. Remember, this was the reason why the stock started a bit of an up move day before, or rather in Friday's session as well, and closed in the green. Now, Dharmesh, on both of the telcos or telecom sector stocks, have you looked at Bharti Hexacom at all? And what's your view there? Secondly, Vodafone Idea, GQG, and now some amounts there, $400 million odd. Dharmesh, you're on mute, I think.
Yeah, sorry.
No problem.
Yeah, I did have a look at both of them. And as far as, Bharti Hexacom is concerned, I think it's priced to perfection as of now. Because whatever juice was left between the valuation multiples of Bharti Airtel and Bharti Hexacom has now been done with as far as, and it's a very restricted geography kind of a play. Otherwise, Bharti Airtel will be cannibalizing itself if this company goes forward to, pan-India kind of a thing. So it's a limited market share and limited, upside which can be captured considering the fact that everything goes as per plan. So that is there. 5-10% more up move from here can be still there on the table. But beyond that, I don't see it's a kind of a structural play over a 4 to 5 year kind of a time frame. Telecom space does provide that play over a 4 to 5 year kind of a time frame, where I think Bharti Airtel suits the bill the best, along with the Reliance Jio platform. So for that, you have to buy Reliance Industries as of now because the business is yet not emerged from the parent company. So my own sense is these two players will be there in the offing. As far as Vodafone Idea is concerned, though the capital investment infusion is there, and going by what the management has to say about the company, 1 year down the line, government will have to convert their equity to keep the cash flow intact, and the company still is floating because the interest payment itself they won't be able to generate so much cash flow. So that is a void. Let it come out of its own trouble. 24,000 odd crores of per annum interest payment is a very huge task for them. And this FPO money which they are, the equity infusion which they are having will go into, upgradation of 2G to 4G and 5G plays. So that's the right thing in a direction, but I think they need a huge capital in place to come out of all the troubles. Maybe a yes bank like a formula which was done 2 years back. If government of India's intent is that way, that should be implemented, then it can be a faster move. And to sum it up, Bharti Airtel and Reliance Industries, if you want to play the telecom sector, is the right play as of now.
Okay. Well, that's interesting. And Sony, coming on this one, whether a Bharti Hexacom or a Vodafone or an Indus Tower or maybe even an Airtel, how do telcos look? Which is a favorite stock, if any?
So I think of all the stocks, Niraj, the only two stocks that are showing some data on a positive side from a short-term trading perspective. First is Indus Tower. You can see Indus Tower, it has held on multiple support around 320, 310. And just as long as it continues to defend these levels, the stock can definitely test 350, 360 on a higher side. This could be the first stock one can look forward to. And the second can be Bharti Airtel. So Bharti Airtel, we've seen it sort of consolidating in a range of 1200 to 1240 on a higher side. So it's a consolidation range. Bharti Airtel on any upside move beyond 1240 can show you further upside towards 1300 levels. And on the downside also 1200, 1180 can act as a very strong cushion. So a buy on dip strategy can be adopted for Bharti Airtel towards 1200, keeping a stop loss of 1180. And the first target can be 1240, 1250. The moment it's able to cross these levels, you can see the upside target towards 1300.
Okay. Well, let's take a break on that note. Speaking of GQG, I think there are some more flashes on agencies maybe or other some exchanges about how GQG's stake has gone up in some other companies. Patanjali Foods, if I'm not wrong, that stock too has seen a bit of an uptick, presumably on account of that. If we can just get in Patanjali before we take that break, 5% higher presumably on that, good volume action as well. Take a break, come back, talk about the derivative space, talk about the auto space, Q4 earnings, and of course, battery names, which are really zooming in trade today.
back. You're watching India Market Close. Well, we have Agam who's standing by to break down the FNOQs for the day. Agam, what is the futures and options data saying about the markets?
So we continue to see more weakness, of course, as we move into a holiday tomorrow, where there was an expectation of a little bit of recovery towards the end of the session that really hasn't played out. And in fact, as far as the Nifty is concerned, we're looking at another cut to around 0.7%, even as we see another 2.5% increase in open interest towards shorts. The Bank Nifty, again, it was a weekly options expiry, which is why that had some sort of an implication as far as your futures is concerned as well. But that is also down around 0.7%. And the expectation was for the Bank Nifty to expire at around 47,500. But it does seem like that's improbable now, considering we have seen it move considerably below that mark. And we're looking at shorts there as well. Moving on to the options market, of course, given the fact that the Nifty has come off substantially and is now at around 22,200 and thereabouts, we've seen a lot of writing around 22,400, 22,300, as well as 22,500. Remember, today, most of the day, we saw a lot of movement of the Nifty around the 22,200 mark, which means that a lot of traders took that as a position and an opportunity to perhaps go short both the call and the put there. In terms of open interest as well, now as we move into the expiry on Thursday, that is the Nifty expiry on Thursday, it does seem like at the moment we are seeing the most amount of active open interest around the 22,200 mark. Well, moving on, where we are keeping an eye on the Fin Nifty. Fin Nifty, of course, there wasn't much to keep an eye on, considering the Bank Nifty expiry was also today, around 21,000, and thereabouts. But as I was mentioning, as far as the Bank Nifty is concerned, 48,000 mark is out of the picture. And at the moment, 47,500 was where we saw most amount of traction. And that's exactly where we are seeing a lot of accumulation in open interest as far as calls and puts go. Moving on, let's talk about stocks, and a lot of shorts coming through. In fact, 4 out of the top 5 open interest gainers are looking at shorts, which would include Vodafone, Gujarat Gas, LTI, Mindtree, along with Syngene. And in terms of stocks which are seeing unwinding, about a short covering for ABB and Laurus Labs. I would not call Exide as a short covering candidate. This is most likely a lot of your older traders are moving out, and then of course you have newer traders who are actually entering the stock. It's locked in an upper circuit of 10%, and I reckon that we're going to be talking about Exide as we move into the final 20 minutes as well.
We most certainly will. Agam, thanks so much for putting that into perspective. And that's a very interesting piece of data on the derivative side that Agam has pulled out. If you can just pull up the stock prices of Amara Raja and Exide both, because both the stocks have seen an uptick. Very interesting that Exide is now locked on an upper circuit or thereabouts. Actually, it's a derivative stock in some sense, so not quite an upper circuit, so to say, which will not last really. But strong moves there for Amara Raja as well. 10.5%, 963 and counting. So really strong show that has come in from both of these makers. My colleague Puneet would be joining us moments from now to talk about this uptick and the possible rationale for this as well. Puneet, we know that brokerage notes are probably one reason, but what is the key summation of the excitement that the market has in Amara Raja and Exide more importantly?
Yeah, thanks for that. So, as you rightly said, brokerages have reaffirmed their positive view on both companies, especially Exide, because Morgan Stanley has come out with an 88% bullish upside in the bull case scenario for Exide. Just going over the Nomura note pretty quickly, they have a buy call with the target price of roughly 485 rupees per share on Exide, which is an 18% upside. Now they see that the EV cell business has gotten a key validation with this partnership of Hyundai as well as Kia, and that is the first in the EV space in India. They expect the EV penetration numbers also to go up. Currently for two-wheelers it's for roughly 5%, and they're expecting this go all the way up to 25% in FY30, while for four-wheelers it's currently just 2% going all the way up to 20%. They are more optimistic on Exide's ability, as well as seeing that the first phase is expected to launch by the end of this financial year FY25, and will see roughly 6 gigawatt of capacity come into fruition. One other thing that the brokerages highlighted that 15% of its revenues are coming from PLI benefits, which is the key for someone like Exide, which is key for those margins as well. Finally, they've also raised their EPS guidance and has raised the multiple roughly 18% for the base business, roughly 3 times price to book on the EV business basically. But also let's talk about Amara Raja right now. Now the company has also planned a giga corridor in Telangana with investments of roughly 9,500 crores. This MOU has been signed with the government of Telangana while they are setting up a unique R&D facility in Hyderabad. They see that the land allotment has been completed of roughly 262 acres. Also, the capacity would be roughly 16 gigawatts, which is a little more than the planned capacity of 12 gigawatts of Exide, which it has announced. And finally, they see that the first phase would commercialize by the end of FY26, roughly 2 to 3 quarters after Exide. So the space has been heating up. Both companies have put in the chips, have put in the investments. And that's all we have currently on the battery space in India. Back to you.
Well, thank you so much, Puneet, for breaking that down for us. Sonia, I'll come back to you. What I'm seeing for Exide on the charts is that, the 14-day and 15-day moving average did meet on around 8th of April. And since then, the stock has been up and above. So what are you making out of it?
So of course, Exide, we can see that it has already moved a lot, and there's no fresh recommendation that can come from current levels. There can only be sort of a buy on dip strategy that can be applied for this particular stock. So somewhere around the 420, 410 range can be that zone where one can reinitiate the longs, keeping a stop loss of 390. And then a target of 450 as such. I think from current level, it's already in the uptrend, and it hasn't shown any particular signs of exhaustion or profit booking just yet. But then it may do so, seeing that today it's just more of a short covering and no fresh long positions getting added. So there could be some signs that, it may start showing you a profit booking maybe, after on a Thursday or a Friday sort of a trade. So wait on those particular support levels to reinitiate your long strategy.
Okay, well, wait on those. Dharmesh, did we by any chance ask you about whether you would buy an Exide or an Amara Raja right now?
Yeah, just for a momentum trade, I mean, valuation-wise, Amara Raja looks more attractive than Exide. Exide has seen a run-up, and the numbers are, it's a leap of faith kind of a numbers if you want to play for 25-30% kind of attraction. Having said that, let's not forget that our minister has also been on record saying by, 27 calendar year, every new vehicle which will be sold in the state will be electric vehicle. So if that is going to play out, then these numbers will definitely fall into line. So to which I have my own doubts, but yes, the attraction is already there. Be it, the automobile industry is expanding. So be it ICE or EV, battery has to be there in all the vehicles. So these companies are likely to benefit from there. And Amara Raja looks pretty attractive compared to, the valuation trade-off between Exide and Amara Raja right now.
Okay, Dharmesh. So now since we're talking about batteries and auto anchs, well, the earnings seasons has kicked off and auto companies will definitely be watched out for. Bajaj Auto is set to release its Q4 numbers on April 18th and the street expects a revenue of around 11,200 crores. What are the expectations from other companies in the other auto companies? My colleague Puneet joins us to tell us more about that.
Yeah, thanks for that. So Bajaj Auto is expected to report great numbers as well. Roughly 29% revenue growth expected compared to last year and keeping margins stable at roughly 20%. Now its peer TVS is no behind. The company is also expected to report great numbers, roughly 20% revenue growth while maintaining margins above 11%. Do note historically the company has been around the 8 to 9% margin band. So this is a key positive seen in the last couple of years. Hero, on the other hand, will see a lower revenue growth compared to this larger peers, but will maintain margins at roughly 13 to 14%. Finally, Eicher Motors, do note that these also include the VECV numbers. Margins are supposed to be stable, roughly in the 25 to 26% range. Going forward, let's look at the passenger vehicle space, where Tata Motors is expected to report good numbers as well. As per brokerages, these are all Bloomberg estimates, but as per brokerages, JLR is supposed to report good numbers, roughly 8.8% EBIT margins, while the domestic CV business has also been doing well, while PV sales have been on a tear as well. For Maruti, this is going to be one of the key surprises here, showing growth on the year-on-year as well as quarter-on-quarter. Above roughly 15 to 20% is what Bloomberg estimates. It sees that it will also see a margin accretion of roughly 2% compared to the previous year, although on a lower base. Finally, it sees M&M as should show roughly mid-single digit revenue growth while sustaining margins. Brokerages such as Nomura although have stated that this could actually surprise negatively, so watch out for the M&M results as well. Going forward, let's look at the CV and the tractor space. Ashok Leyland continuing its good momentum over the past 3 quarters into the 4th quarter as well. Highest ever EBITDA margins of roughly 13%, unheard of on the Ashok Leyland historical numbers over the past 2 years. Going to show decent revenue growth as well. It is expecting the sales have already been out for the quarter, so watch out for these numbers. Finally, Escorts going to report roughly low single-digit numbers. It has been a very subdued year for tractors in general, and the next 2 quarters aren't looking on very better. So commentary by the management for Q1 for FY25 will be key. And finally, the tire stocks. We see that all have been reporting decent numbers in the past year. For Apollo Tyres specifically, there might be a revenue degrowth because of lower average selling prices compared to last year, but margins are going to sustain up by roughly 180 basis points at roughly 15 to 17%, which has been high compared to the historical numbers of Apollo. For CEAT Tyres as well, we see that margins are going to show roughly between 50 to 180 basis point growth compared to last year, while JK Tyres is going to show roughly 5% or 500 basis point growth in its margins compared to last year. MRF, on the other hand, going to show decent revenue growth, mid-single digit revenue growth expected and on the margin. So these are all the stocks that we've taken for the auto preview. Results as stated by Mahima start on Thursday with Bajaj Auto, and that's all we have on this segment. Back to you.
Okay, well, watch out for some of those auto names as well. You have to admit that today it's not been, yes, some of the auto ancillaries may have done okay, but it's not, the last few days haven't been exactly happy hunting grounds for some of the auto majors, large, mid, small. Nifty Auto today too is lying absolutely flat. Now, Dharmesh, what from the earnings end are you looking forth when it comes to the auto names? Where is it that you expect strong performance and there be some valuation comfort as well, maybe?
Yeah, it's a difficult choice as far as auto names are concerned. Earnings will be there. I mean, the numbers will come in line with what the street expectation is. And I think this quarter, Q4 of FY24, is the best quarter for next 1 year. FY25 would be a difficult and challenging year for all automobile companies. Volumes will be there. The challenge will be on operating margins because their input prices are going to go up. So we have seen a commodity rally so far, and I think there will be extension of commodity rally the way, manufacturing activity, industrial activities expanding in, say, US, Europe, Germany, China, India, all are doing well. So there will be pressure on the margins. And in that basket, if you ask me to select 2 stocks, so then the 2 stocks are, one is Tata Motors, so because of his JLR doing fairly well. And with China picking up the kind of GDP growth we have seen. So China is one of the major market for JLR sales for Tata Motors. So that market is likely to do well along with, America and Europe. And the other stock from the 2-wheeler segment will be Bajaj Auto, because exports has been picking up well for Bajaj Auto and they have launches for super bikes as well. So all put in together, I think still there is a valuation comfort out there in both these companies, 2-wheeler space, Bajaj Auto, and 4-wheeler space, Tata Motors. So there one can hold on to the existing buy position. If you want to add more, one can add at current levels, but should have a horizon of at least a year's perspective. 20-30% kind of a stock price gain is definitely not on the cards. And let's not forget, Tata Motors will also be going for the demerger of their businesses. So SOTP valuation is around 1400 as far as we are concerned for Tata Motors.
Okay, well understood. Sony, your top picks in the auto sector?
It would be Tata Motors, which is looking quite strong on a technical and derivative pick. That parameters you can see 970, 960, very strong support on charts as well. So keeping a stop loss of 970 for a short-term trade, the stock can test 1040, 1050.
Okay. So that's on the auto names. It's almost 3:20, the time of the show wherein we should get in some closing strategies. Sony, if I had to ask you for one top closing strategy, which one would that be?
Niraj, it will be HDFC Bank. It has reclaimed the 1500 level today, and the stock is quite comfortable. In fact, it's the only stock which is giving some sort of comfort to Bank Nifty as it rises back above 47,500. So HDFC Bank can test 1530, 1540 levels from current levels, and the support is just it's at the cusp of it. So 1500, 1495 is a good support. So keeping a stop loss of 1495 and target of 1530, 1540.
Okay. Some stocks with some spurt in volumes today. So look at the Mahima was talking about Dynacon Systems. So that one is of course up 20% on very high volumes. Dhani Services is up 14% on volumes which are 5 times the normal 2-week average. So that's done really well for itself in terms of an up move. Viatech Wabag is standing out 15% higher. Volumes 10 times the 2-week average. Some extremely strong showing there for this one. As we speak, Exide is up 12% now. So it was maybe 10% for a brief bit. It's still up 10%. Okay, interestingly, BSE was showing some 12% up move. Maybe on the BSC it is slightly higher, but and then NSE about 10%. But some strong move there for Exide, of course, in the session today. And there is a bounce back, 11.5% on the BSE. And there is a bit of a bounce back in Titagarh Wagons. Couple of days on a trot, it was getting drawn down. In today's session, up on fairly high volumes as well, up about 7% in trade. So really strong show. Mahima, just the classic move. Small gaps bounce back a little and some of the stocks see some very, very strong moves today.
Absolutely, Niraj. But we'll move on, and we spoke to Anand Shah of ICICI Prudential AMC on his outlook on the power space. We asked him if he thinks it's a multi-year theme and if he is still constructive on it. Listen in to what he had to say.
There's no denying that the power, we after a long time, we have reached a point where now we are worrying about power deficits, right? Plus, there is a change in the structure. So if you have more solar power, we have ample power during the daylight, but then you have a pockets of a couple of hours in a day when we will be deficit. So those needs a lot of investment in grids also, a lot of investment for around-the-clock renewable. So there are various opportunities across the board. I think we are going very bottom-up. To be very honest, there are opportunities across the board. At the same time, as you rightly said, it's not a theme which is now undiscovered. It was a theme undiscovered 24 months back, 36 months back, when actually nobody was looking at it. But I think we have reached a point where India will need to do capex for power. Deficit is for real. We are also talking of which was shunned, which is a thermal-based power plant. So that's something which is coming back on the drawing board that, look, while we will invest in renewables, we'll also need to invest in thermal. So I think it's more bottom-up, power generation, T&D, everywhere we are seeing investments happening.
Well, okay, that was quite an interesting thing to know. Well, today on How Rich is Your Candidate, we put the spotlight on Nakul Nath's portfolio. Alex Matthew breaks it down for us. Alex, what do you have?
Well, the question is, how rich is your candidate? And this one is the richest yet. Nakul Nath has got movable assets of 650 crore rupees. And we'll get to how he's reached that number. But let's first talk about the taxable income that this particular candidate has reported. In FY23, it stood at 7.89 crore rupees, and that's quite a substantial jump over the last 5 years or so. Let's come to the movable assets. As I said, just under 650 crore rupees. He's got immovable assets as well, to the tune of 2.92 crore rupees in the form of agricultural land, and total immovable assets of about 48 crore rupees. Now, let's talk about the movable assets, because within this, he's got domestic fixed deposits of 17.6 lakh rupees, and he's got offshore bank deposits to the extent of 25.5 crore rupees. He's got cash, which is also the highest that has been disclosed yet by a candidate, of close to 45 lakh rupees. And he's got gold bars as well as silver and diamonds and other gems worth over 2 crore rupees. Now, he's got investments in listed companies, about 30 in his portfolio. Cumulatively, that's worth about 5.2 crore rupees. The top holdings are in the likes of Adani Ports as well as Nupur Recyclers, which, by the way, I was looking at it, is a company with market capitalization of above 500 crore or thereabouts. He's got Yes Bank, Cosmos First, as well as Lemon Tree. He's got unlisted stocks to the extent of 14.7 crore rupees in companies like Alzo Realty, as well as Hero FinCorp, Polymatech Electronics, as well as the National Stock Exchange, NSE. Now, what else does he have? He's got investments in bonds as well as alternative investment funds and PMS to the extent of 8.4 crore rupees, and that's subdivided into the likes of the India Infrastructure Finance bond as well as sovereign gold bonds to the extent of 30 lakh rupees, Ask Investment Managers, Abacus Asset Managers, as well as Helios Capital Management and a couple of others. He's invested a little bit of money in mutual funds. He's got the dividend yield fund from HDFC that's worth about 77 lakh rupees. And he's also got the SBI Contra Fund as well as the UTI Master Shares Fund. Now, if you were paying attention to the numbers, you will notice that this does not amount to 650 crore rupees, and you're probably wondering where that comes from. It's because of the NB Family Trust, in which he is a beneficiary, and that trust owns quite a few businesses, mostly in the unlisted space.
Well, that's some portfolios. One portfolio for which Alex had some advice as well because of the quantum of mutual funds in that portfolio. But otherwise, it's been a pretty interesting spotting, really, if you will. Thanks, Alex. Thanks for bringing that to us. Before we wrap up, couple of minutes left. Dharmesh, before we thank you, from the last time that we spoke until now, a few results have come out, a few results are expected this week as well. Which is the one that you're watching out for the most?
Infosys.
And why so? I mean, because of the guidance that they will provide for the year?
Yeah, definitely, yes. So that would be key to determining the entire sector, how it's going to pan out for FY25. Seeing it in light with what TCS has already delivered and Accenture has guided for. So that's a very critical result to watch out for.
And Sony, before we thank you, a couple of stocks which stood out. VATech Wabag, good price and volume action, and Dhani Services as well. The second one which had some action. Either one of them if you've looked at on the charts.
Definitely, Niraj. VATech Wabag is something that's looking interesting from current levels. You can see, the stock has already risen up today by 10-15%. And even then, it's showing a lot of strength with good volumes. 900 is a good support on immediate basis as long as it's holding 900 and even closing above it today. So it can test 960, 980 in the coming days.
Okay, and Sony, so overall, I know you're a technical analyst, but with the earnings season coming in, any particular stocks that you are bullish on when it comes to seeing the chart patterns?
So definitely yes, but not on the basis of how the earnings can impact, but basis on how the data is showing as of now on derivative front, and that will be the metal space. So I think metal space is looking quite interesting, and the stock that is yet to perform in comparison to how Vedanta NMDC has performed in recent days. The stock is Coal India for now. You can see it has been holding up to 440, 445 is a good support. And even today, not a lot of movement, but the moment it's able to cross 460, you can see it retesting its previous highs of 480 plus levels. So I think this stock is at a very good risk-reward ratio on a technical front, with 440 as a good stop loss and 480 can be the target.
All right, Dharmesh and Sony, thanks so much, both of you, for taking the time out and being with us and guiding us through the last 1 hour of trade. Really appreciate your time. Let's start wrapping up the markets for you. And for the broader end of the spectrum, it's been a great day because ahead of a holiday, you're seeing some of the stocks seeing some serious long positioning build up as well. The Nifty stayed quiet, about 0.5% lower, so no big changes there. But the mid caps and the small caps have had a good day of trade. So even if the mid-cap index is ending in the green, in the red, you would argue it's flattish, and the small caps too off the highs of the day, but still okay. Mahima will talk about the mid-caps and the small caps, of course. Let me just try and bring out the larger ones. The sectoral, okay, let's start with this and then the sectoral indices. IT stayed under a cloud today, but I must say that giving it company in some fashion are financials yet again, because IndusInd Bank is down 3% and Bajaj Finance yet again is down about 1.5%. There's something seriously amiss with what's happening to Bajaj Finance. I don't know if it's got to do the JFS effect or whatever you call it, but some of the days, Bajaj Finance, after moving up from those 60-200 levels, has succumbed to some bit of selling pressure. There's a lot more green than red on the screen than what it was at 230, you have to admit. And HUL is piling on the gains. ONGC yet again 1.5%. And HDFC Bank, Soni Patnaik's top call, is up about 1% as well. There is strength in Coal India and BPCL. So some bit of a PSU flavor. And Reliance is also about 0.25%. Before I hand it over to Mahima, just want to bring the last 5-day, 7-day chart of Bajaj Finance if we can very quickly, because the stock has seen some serious selling in the recent past, and today is not just the day when it has done so badly. I think the last few days Bajaj Finance has had a bit of a pullback for sure, 3.5% for the last 5 days. But Mahima, the broader end of the spectrum, what's standing out?
Right, so clearly the mid caps and the small caps are doing better than the benchmarks. The broader markets are clearly outperforming the index. If we talk about the mid cap 100, where you'll see that the index is currently just 0.01%, so it's trading flat basically. And in terms of the small caps are definitely outperforming all the indices. If you see overall, it's up around 0.68%. Just to have a quick look at how the breadth of the market looks like, well, 1251 stocks advance and 705 decline. So throughout the day the chart has been it's getting narrower. It did get narrow, then it did try to expand also, but overall if we see the markets are skewed towards a little more towards the advances. Now, just stock specific, CRISIL did come out with its earning today. The earnings were not up to the mark, but if we see the revenues have gone up by around 3%. In terms of EBITDA, the EBITDA was down around 5.6%. Margins have shrunk from 28.5% to 26%. So something like CRISIL is down around 2%. Then there's Exide. Well, we've addressed Exide in the show quite extensively, but it's up around 15% today. I mean, that is something very interesting. Bharti Hexacom, here you go, 13% up. Well, very interesting to know stocks like this, who've just got listed and going up and flying in the trade, in fact. Then if we can pull up the chart for Ugro Capital, let's see what Ugro Capital is doing. Well, it did come out with its business update. There you go. That the stock is also up around 3.2%. The business updates look good. Their overall AUM growth was around 9,000 crore, up 48%. Also, since we were talking about Dynacon system, if you can pull up that, even that stock has been doing pretty well in trade today, 20%, there you go. I think this should be the upper circuit, if I'm not wrong, for Dynacon systems. And, this is because it has won a contract of around 233 crores. But Niraj, what do you think? How do you think the market?
These days, it's difficult to predict, Mahima. So let's just call it a day, because we have we have an off day tomorrow.
Definitely.
The world markets are on, so never know what happens this Thursday. Hopefully, peace prevails and things are kosher. But on that note, from Mahima, me, and the team that has put this show together, thank you so much for tuning in. Have a great Ram Navami holiday, and see you with the markets on Thursday. Well, a close in the red for the large caps, but the broader end of the spectrum did okay. You have to admit that today was a day which had more positives than negatives. Positives because if you look at the market breadth for the day today, it was firmly in the green in favor of the advances because the small cap index had a pretty strong outing in the session